So, as I said, based on what we discussed yesterday about this block on the 8-hour perspective, we've had price done the run fill into it successfully. So, projection immediately price took out the high we're looking out for on the lower time frame for bullish case scenario, in as much as we're not actually kind of active to take it. 1 hour time frame. Okay, so if you look carefully, more like what we stated yesterday, we practically needed a case scenario of a major to play out so that we can dive into this particular setup because we were only seeking for a confirmation. So as I see, the confirmation was actually available even when we're not active. I think we had this as the high we needed market to read. Let's read, we dived a little bit in, then the area we considered the 50-50 was where price might likely or might not. Then the liquidities above here that we're actually aiming the market to read. And successfully, we've swept all of those liquidity that was actually marked as at yesterday. Now, we tend to consider the fact that price gave us a proper mitigation, gave us this, and this area was considered as our range, then consider this breakthrough as our initiation, then consider this as a momentum guide through, letting us know that we are ready. Then came back for a proper mitigation into SC, then we had this continuation. Now, in the continuation was where we actually realized that, or we actually noticed that we wanted price to read this high successfully. The market has swept it off completely, and indeed came back for an inducement, which is around this leg, swept it off completely and rallied. But likewise gave us a hunt of liquidity, through while coming back. That is this low resistance came back likewise to sweep the liquidity, which is the inducement, then continue that flow, right? Now, this now tells us that the market is now willing to sweep this high. We've gotten first intentions, mitigated through. Then, if you take also likewise, you will realize that we have our FBG right here, where the market had to mitigate to fill through and continue. Gotten a break of the structure to validate. Now, the market is reacting off from the liquidity that was marked as a yesterday for the market to read what we discussed yesterday. So let's dive to 30-minute time frame. So the 30-minute time frame, what we were actually looking out for was just something simple. As I said, was this whole liquidity that was actually dropped on the marketplace, something as this. Then we actually had this can do for the market to actually mitigate through, which isn't possible because on the higher time frame, it's actually weak based on what we discussed yesterday. Then a breakthrough, mitigation, imbalance, fill, a break of the structure for continuation, weak rejections. Then we can actually have the market use this because this is not a major or POI, proper POI for the market to use, rather above here, but the market can't use it because it's actually it's actually how do we call it, a POI. So now what we're looking at for now for the market to mitigate through is just inside here. The same 50% range we actually marked, that is from this to this. To this, right? Now, if we find out carefully, we could not really rally back into this because of the distance that was given to the marketplace or the displacement, because either we call it distance or we call it displacement. So in the area of displacement, we had a breakthrough, a displacement, a breakthrough, then displacement. Now, we are going to still have this 50% of the range. For now, I'll be considering just this to this higher because I need to see more intentions to are seeking this, then likely know if the market will rally back here. So if there's any area again for our point of interest for us for a buy continuation to be into this range to continue upward. That is if the market gives us certain good perspectives in price to continue that range. But we've actually played our cards well as at yesterday, and it's playing accordingly to what we said yesterday. So what's our take? Or what's your take?
Perfect. That's it. So the
Okay.
next thing is just to look at another asset since this one is still playing out what we discussed yesterday. So let's look at another asset.
Okay. So what's in our case study? I think we also had 10S, yeah? Abby?
Mm-hmm.
Okay. Okay, good. Bingo. We already have this. This is actually making sense. More like what we discussed. It's not actually going above what we discussed, but at least it's giving us some good cards. We'll
Page.
still have to. Huh?
No, no, not yet.
Okay, so on the 1 hour time frame, so we still consider that the market needed to mitigate a certain rate in between, right? And we marked off a POI that the market is mitigating from this area where the market is coming from and where the market too likewise is actually mitigating from this perspective. Because by knowing these two things, then we know we're actually on the safe side. We have the market draft inducement from this perspective. Then we have the market reacting up from an unmitigated POI. And we're having the time frame to be still bullish according to 4 hours. According to 4 hours, actually. According to what we slated, the market was not supposed to sweep this POI. We swept it actually with a week. Swept it up with a week. And the question here is, will the market actually still continue upward? Based on what we discussed yesterday, likewise might not. So in the sense that we have this POI mitigating where the market is actually mitigating from. So we could see energy to take it out because we have equalized resting above the marketplace at the area of premium, right? Then if we could actually say find sales, not a problem. But what we still need is a confirmation, more like what we discussed yesterday. So on the 15 minutes, let's see what we actually have for 15 minutes. Now, we actually targeted this POI. What we were looking at, we looked at the market as that is this high being inducement for the market to read. So the market actually swept with a week, which was considered in our yesterday analysis, have this high that is actually been labeled as liquidity, as inducement. Then we talked about this area as being a range through, so a break of the structure, minor break of the structure to confirm that this inducement has been readed. So then we had a minor break of the structure. Market did a little bit of mitigation from the POI that was not mitigated. Then we have this high, this quick high around through. So I think we had something that the market was supposed to mitigate above there, if I'm not mistaken. So let's go to 5 minutes. Okay. So on the 5 minutes time frame, I think we had a POI. Yeah, we actually had a POI where we're actually considering the market to actually mitigate from, right? That is on the 5 minute time frame. So I think we looked at something like this. I think is it this POI this? I think so. But considering to the fact that this is actually a range and the market could also practically read it, so we consider this high being inducement for the range market to take out. And if the market reads this and every other area around there is safe based on what we discussed yesterday. But now the market is actually mitigating off from this. So we still have to make do a little bit of discovery. So let's check this POI. So first thing first, we have this, and we have this, right? Now let's see, consider the fact whether Okay, so making sense somehow, the market is actually mitigating off from that unmitigated area, right? Which is
Mhm.
this. Every place the market is actually reacting from is actually valid, except if I mean it's valid for every area in the marketplace. So now, but having this as a reaction zone is not actually still bad. But what we're also going to be considering is from two sides. So we just flip the coin both sides. And based on what we marked yesterday, we looked at this POI. We looked at this area being a break of a structure, a breakthrough. We had this being a break of a structure likewise. Then we also likewise looked at this area as a POI the market mitigated from, right? Think
Mhm.
so. Yep. Yeah. We looked at this as an inducement yesterday. Likewise, we looked at this as hunt liquidity even. So we noticed that the market has done this. I think this was what we marked as a break of structure. Then we also marked this POI yesterday as see, I think we remember that yesterday. So you see the market is already mitigating off from that exact POI. Okay? So now the question here is, will this high hold it? It's possible that this high can't hold it. Might not even be able to hold because first thing first, this is just a hunt of liquidity through, not actually a take on the actual need of the market, which happens to be inducement. So a hunt through, so you could see this as liquidity. The actual place for the market to even for to use to continue if it wants to sell is this POI, which is above here. This considering as the main inducement, but this is actually a proper reaction zone. So the question here is this area where the market is actually holding price, is it valid or is actually this POI? The question. Because in between, we have this, right? This is where we can now confirm our proper break of a structure from this low. So once the market now reads this low, confirms our actual BOS, and we can now say, okay, the market has gotten giving us a break of a structure to confirm that this POI is now valid. That is this POI. This POI is just a reaction zone. The main confirmation comes below this low, and we are now actually be fine. But for now, based on what we used to look at, we aim out for the market to look at, aim out for the market to make sure it uses our area of concern until there's an invalidation. So for now, considering this as an area for a buy case scenario until there is invalidation to consider us being how do we call it? Being bearish, which is this POI, this reaction, this POI into this. Let's say this is a reaction zone. If we break through, since we're reacting from here, if we break through this low, that's a confirmation. We now expect the market to rally back for us to continue that bearish momentum. But even we have the market reacting from SC, right?
Mhm.
So we are valid because the last area of reconstruction on this time for 5 minute time frame from here is bullish, right?
Yeah.
And only way we can have this bearish is when we break this low. We're good. But for now, I actually want to be a buyer that is into the buyer remorse until this invalidation. So we're on track.
Yes. Yeah.
Okay, so I believe it's actually active or valid.
Mhm.
Okay, that's for 10S. So we're waiting for two things. We're actually being a buyer on this till this high is taken because there's no validation yet. to confirm this reaction zone. So practically going to be a buyer until invalidation. It's not actually about taking up a loss shot or it's one of those things. Okay. Okay, so as I said, actually going to be a buyer at that level. Then consider the high, which is at the area of reaction zone to be taken until then only reaction zone above. Let's see. Okay, so I think we've actually gotten that part area, sure. So
Yes, sure.
looking at for buy case,
Yes, sure.
so I think that's that for tennis. So we will have to keep this on our checklist. Checklist. I think we have a checklist, right?
Mm-hmm.
What we'll practically be doing this concept. Every single time we want to approach price, we practically have a checklist. We just put it up on our checklist. Tennis, this, then that, then you know what we're considering on the long term.
Mm-hmm.
Not bad. So I think I'll have to also label this area, this common knowledge, which is our area of inducement, coupled up with the liquidity below the marketplace, then the SC candle where the market is actually sponsored from, then reaction zone where I seek the market to read because we've not gotten confirmation below this low for this reaction. So I'm only being on the confirmation based on the last break of the structure to continue to the
Mm-hmm.
upside. Okay, so any other one?
All right. Thank you for this. I think we should do the 101S.
I think I'll leave that side to your table. Um, you can actually share screen.
Okay.
So let's make this two coins of the same type. Actually on track.
I've sent request. Some minutes, please. All right. So for this 100 days, yesterday when I was looking at it, it was around this area. The buy
Okay,
set
yeah.
the buy setup was around this area, and basically looking at the higher perspective, we can say where we have our normal break of structure. Where we had the normal break of structure was here.
Yeah.
And we can see all those symbols coming back. Now, if we're going to be marking our last valid range structure, even if we're going to continue with range structure, our last valid range structure was here.
Yeah, that's true.
So even if the market is going to use range structure for continuation, at least we should come back and take this high.
Yeah, exactly as our internal range liquidity.
Yes. So that's if market is going to use range structure. But if we are coming back here, we'll be having a very long buy. But then we need an intention to say we are coming back here again. So
Exactly.
first, let's deal with this. Let's deal with this particular last range structure break. So when I saw it yesterday, I just marked out this area as last BMS, and coupled with the fact that where the market was reacting was a very good zone. If you check it, we had a major there. Let's go to it last time.
Yeah.
We had major. This is a major here. So the reaction was actually valid, but as we are looking at the left side, we should be looking at the right-hand side too.
Yeah,
So
exactly.
I marked this particular high as break of structure, right? As the last break
Yeah.
of structure for this right-hand side. And basically, I was marking this low as the inducement that would come back and haunt. You can see it was just a plain low. It was not a major. And after this low was created, below it, you can see that we had the major there.
Yeah, exactly. So we're actually expecting market to return back soon.
Um, I was expecting it to return back here, but when I checked on the weekly time frame, this place has been filled by this one. Eventually, when I checked it, this
Yeah.
particular move to the downside has filled up this place. Hence why
Mm-hmm.
market is reacting at this sponsored candle, this particular one. So let's mark that out. So basically, our first target for anything is this high, right? So it automatically means that we are still looking for more buy setup. So
Yeah, exactly.
what I'm just expecting right now on V100S, let me go to 4 hours time frame, is for this high to be broken. So immediately we take this side. Of course, I know that when markets break structure, we will definitely want to do some internal structure retracements.
Yeah, exactly.
So this is where I'm going to be looking for buy setup. But I'm going to be very patient for market to break this particular high, come back to the internal structure, then we can continue the movements for the buy setup to that particular area. So what do you think?
Yeah, that's actually very okay. And I'm even looking at the other aspect of RIMC, which is in the aspect of the range, initiation around this perspective. We have initiation, then we
Mhm.
have this momentum. As far as we have this momentum,
Mhm.
because the momentum really is actually one of the things we look at for. Yeah, so it's extremely very valid. So we need the market to return back into this particular range,
Mhm.
then we continue upward. Yeah, it's valid because it's in line with every other thing we're looking at.
All right. I think that's fine. I think that's what the volatility 100 one is. So let's just wait for the setups to play out. And I guess the volatility 10S is currently playing out. So let's see what it gives.
Yeah, then we look forward by looking out into other perspectives or this may probably could be later in the day. We actually think we're actually enough or good enough with this.
Yeah.
And then likewise tennis.
Okay.